Good morning. How we doing? What's up, guys? Happy Friday. Hope you're having a good one here so far, but it is time to get to work. Let's see if we can finish out the week strong here. Remember, we have a long weekend, Memorial Day weekend, Monday. No stream, no trading. On Monday, we'll be back Tuesday, but today is business as usual. There is the opening bell. Let's see what we get here off the rip. Now, as far as news on the day, and we got to talk about market inertia as well. Let's start here with news. So, here's what we've got as far as news. In 5 minutes, we have a couple of Fed speakers. At 9 a.m., we get U.S. new home sales. At 10:30, we have the U.S. Treasury Secretary speaking. At 11, another Fed speaker. That's really about it as far as on the stream. And then at noon, Trump is signing some executive orders. Okay, so we'll see if we get random tariff headlines. Aside from that, I'm not too concerned about actual news here today. Again, new home sales at 9. That's one of those headlines where if someone's like stuck the wrong direction and they're 150 points in the red, they start looking at new home sales as their saving grace, but no one actually cares. We'll see if it moves the market too much. It probably won't. If it does, it'll be 15 seconds of volatility. But aside from that, we're pretty much free and clear to trade as we please, which I'm looking forward to doing here after all the tariff talk we've had lately. Now, market inertia-wise, let's take a look at the daily quick. Big old dump off to start this New York session. I say big old. We're down 1.5%. That's a couple hundred points, 330 points in the red on the Nasdaq so far here today, which is exactly what we've been talking about, by the way. We've had a lot of these bars. You can see this. These bars here. These have been the days where I haven't really been trading my best on these little wick days with small little bodies. I've been performing better when we get more volatility. A lot better. In these little wick days, it's a small sample size. I can't. You know, I was looking at my data last night and I was thinking, you know, the sample size is so small, I can't even really make any kind of assessment here. Let's just hope the volatility picks up tomorrow before the long weekend, even though it probably won't. And here we are, it is. So let's see if that can sustain itself. That's good news. It's always good to get volatility when things are a bit slower. Gibbs, good morning. Quicksilver, I bet you're having a ride here this morning. Add a couple extra zeros to the net worth, I bet. Starbuck, good morning. How we doing? Tony, Rick, Trading Chris, welcome back. Ken, how we doing? Old school, good morning. Eddie, how we doing? Steven, good morning. Marshall, Kevin, what's up, guys? Sonia, Pat, Dips and Peaks, welcome back, guys. How we doing? Good morning. Doug, how we doing? All right, so 3 minutes into the open here thus far, trying to get a little push. Now, the opening range, the opening bar ranges are actually not bad. That last bar was 55 almost. This bar looks like it's going to be similar, if not maybe a little bit higher as far as point range on the 2-minute bar itself. That's very good. That's very good. What we saw maybe 3-4 days ago and back is 30. I think we saw a couple maybe 25-point, 30-point opening bars, which was kind of depressing to say the least. You wait all morning for the bell to ring and it's like nothing. But that has been solved here seemingly the last couple of days, at least off the open. Let's see if we can not get sucked into a range here today like we have a few days this week, which I think have made things a little bit tougher. The channels haven't been extraordinarily clean. I know some people have traded well. I think it really just depends on your style. But I think things are cleaning up. I think we're looking up here as far as market conditions. Dadaris, good morning. How we doing? Sandra, how we doing? Lee, what's up, brother? Welcome back. All right, well, Bull's trying to pump this thing. Now, 21,000, that is a tier 1 level. We'll see if that comes into play here today. If it does, I expect people are going to be looking at it, but not nearly as much as like a 20,000 or, 15,000 or what it will look like at 25,000. Keith, 4-hour day for me yesterday, much needed. Good work, Keith. That's a nice big day. 4 hours, a great day. Jose, how we doing? Good morning. Nice couple of bull bars here not long after the open, huh? All right, 20 seconds left here on this 2-minute bar. I feel like it's been a while. Let's do an end of week check-in with all you guys. How we doing? What are you trading today? Funded evals? If you were funded, how's it going? If you blew some accounts, feel free to vent. There's no judgment around here. We're all just trying to get better. Maybe you're struggling to pass an eval. We could talk through it while we wait for a nice little setup. How's it going? Kevin, close to passing an eval? Good work. Assuming it's a trailing drawdown eval, what I like to do is size down into the finish line. You invest more time into it as it becomes a higher probability that it gets into a funded account, right? Early on in the evals, I prefer to take the most risk on trade 1 because I don't want to spend, a week, 2 weeks in an eval, opportunity costs. So I trade pretty big on that first trade, take the most risk on the first trade, and if it happens to be a loser, you didn't invest much time into it. That's the way that I look at it. Mio, slow and steady on funded. Sidonia sitting in Louisville, trading paper money. Superfly, great week. Should pass multiple evals today. Cool, brother. Scooby, my risk management settings still have me locked out today, so I guess no trades for me. What's going on there? Michael, been down on my eval, trying to get back even before next week. Never taken this long on an eval. Doug passed 1 take profit trader test yesterday. Cool, man. That's a big deal. Working on another test today using code BIG. Joseph, what's up, brother? How are you doing? Chris is on a funded and a group of evals, or at least funded. Didn't say how many. Eddie 450 last couple days on personal. See here, bear attempted a reversal. This, such a common little sequence here. You see that shrinking bull bodies? Starts with a big bull body, shrinking bull body, and then you get that little attempt at a reversal bear. I'm not going to call it a doji because the body's a little big to call a doji, but you know what I mean. And now at this point, what is this? This is a low probability, high potential reward to risk bear setup. Now the bulls could very well take this higher, break through the wick high. That's what makes it low probability, right? Because you don't have enough really information to call it a high probability reversal sequence yet. Like we talked about, we would need, at least 2 minimum, more likely 3 consecutive bear bars to get more information to make it a higher probability bear setup. But right now, it's relatively low probability, better reward to risk because you're early. Think of it that way. You're early. You're taking the trade with less information than other people might be looking for. So what do you get out of that? You get better reward to risk because you're early. But because you're early, you get lower probability. That's it. Clinton passed his 50K take profit trader test. A lot of you guys are passing take profit tests. That's really good to see. Makes me very happy to see that. Because those things are assets. Daily payouts, it's a beautiful thing. Even just one account, man, you can generate some revenue. TC, good morning. Nico got long on the break of the consolidation. 100 points to start the day. Probably done for the day, honestly. Mr. Anonymous, just passed my first take profit trader using code BIG. You really helped me put things into perspective. Thank you. Happy Friday, y'all. Good work. Good work, Mr. Anonymous. It's really good to see that you guys are passing those take profits. Not that I thought that you wouldn't. I knew a lot of you guys would. Just from hearing the way you guys trade in the chat. All right, 840. Letting these institutional orders clear. We're pretty much set here in a couple of minutes to start trading. So let's see what we get. I know you guys see this. We're getting a little bit more information here. 35 seconds till to close this 2-minute bar. Now the 5-minute 20 EMA, by the way, that is currently sitting down at 860. So, you know, there's room. You're looking at a 2-minute chart right now. This would be the 5-minute look. This is the more relevant EMA. Again, the 20 on the 5 is much more heavily watched. The 2 minutes, not an incredibly popular chart. I like it. It gives me a good balance of quality and quantity. Whereas, you know, if you only trade off the 5-minute, you'll probably end up taking less trades, but the quality will be slightly higher. If you trade on the 1-minute, you'll take even more trades than the 2-minute, but you'll have less edge per trade. You can get to the same result, by the way. That's not to say that one's better than the other. When I say quality improves on the 5-minute, you shouldn't think of it like, oh, then I should definitely just trade the 5-minute. The 5-minute's a great choice if you decide on it. But what I mean is you can get to the same end result if you have edge, even to varying degrees. If you have more edge on the 5-minute but less trades, you might make the same amount of money than someone who takes more trades with less edge per trade but still has edge on the 1-minute. Okay, I think it's more of a personality type thing. That's the way that I think about it. I really think that if someone's telling you that, you know, such and such is the best time frame, if they say, hey, this is the best one for me, that's a much different thing than if they're like, this is the, you know, the 5-minute is the best, you should trade the 5. I just believe that's fundamentally incorrect. They all just exist. There's no best. There's only what's best for the way that you trade. Now, when we're talking about psychology, there is the most relevant, which is going to be like the daily's a big one. The 5-minute's a big one, right? The 2-minute, not so much. But just have it up on the side and you can get all that information regardless of which time frame you're trading on. It's not that big of a deal. All right, Bear's trying to pull this thing on back. Now, as far as 50% retracement, I mean, we're pretty much there off the open. We're actually a little bit through there. Now, why is that relevant at all? It's not a TA thing. It's not just because 50% sounds good. Think about what's really going on here, right? Now, it's not going to be a ton because this has happened fast off the open within 15 minutes. But you see this push, right? You're going to have shorts shorting this move. Obviously, more bulls are buying. hence why it went up. But you're gonna have shorts getting stuck, and they average in, and they're sitting there. They're like, "Oh man, we're 3 minutes into a Friday, and I'm down 17,000. I have to fix this before I walk out of the office, or the wife's gonna hurt me." So then they hold, and it fades, and they get to break even, and they go, "Oh, I'm just gonna close it at break even." This happens constantly, all the time. And it makes sense, right? You have people averaging in, they're holding and hoping and praying to whoever they're praying to, and it fades, and they just get out at break even. Not that this is good trading, okay, but it happens all the time. It happens constantly. What does that mean when they cover their shorts? That's buying pressure. That gets added to the equation. And so, sometimes it's enough to prop it up. So you should be aware of these. Don't trade off of them only. There are better things like price action to take your trades based on. But this is one of those things that I fundamentally work into a trade plan and think, okay, I'm going short. We're maybe 35% of the way into the pullback. My take profit is going to be maybe 65% down. We're going to have to go through that 50% zone. It's a zone. It's not an exact number, right? Because everyone has a different average. Maybe I won't take that trade. That's how I operate as far as that. Chris, type it up, man. All right, we're testing the 5-minute 20. See, there is the 5-minute. By the way, we are past 8:46. So we're now into that territory where I can absolutely put trades on when we get a nice good setup here. Jormisha, good morning. This is the 5-minute chart that you're looking at, by the way. We should probably zoom in a little bit here. Nico, let's talk trading. Psych passed 15 plus tests, but have blown all paid accounts and only got one payout. I followed my rules and think I'm trading the same, but clearly not. What gives? So Randy, a couple of things here, a couple of thoughts. First of all, did your payout? Well, with 15, the answer is probably not. But we should clarify. Did your payout cover more or less the cost of all your evals, activation fees, all that? It probably didn't based on the payout max. But it probably took a chunk out. So there's a psychological factor, like I'm in the red on this prop trading thing. I got to make this work. I got to at least get in the green. And then you start forcing things. There's that aspect. But Randy, probably what's happening based on, I don't have context as far as how long this has been. Whether it's been a year and a half or 6 weeks, I don't know. But probably what's going on, Randy, when you see your data shifting like that and you're like, am I trading differently? Probably what's happening is the market has shifted and you have not adjusted. So it's always kind of a fumble for a day or two, for everybody, by the way, when the market shifts, because you have to let the market shift. You can't make the decision change before the market actually shifts. So for everyone, when the market shifts, it's going to happen at different times, but you're going to fumble for a day, 2, 4, whatever, until you kind of get a feel for the newer market environment. That's why we talk inertia every day and try to get a grasp on this so that we can make adjustments on the fly. Like, okay, maybe I should lean more heavily into having more confidence of trend breakouts succeeding. Maybe they're going to succeed at a 30% rate versus, last week, a 10% rate. We're seeing 90% of breakouts fail right now, and that might be adjusting here. Today's like day 1 or 2 of that potential coming. We'll see. Okay, because we've been in a brutal range environment. But before, maybe, 4 or 5 weeks ago, I wouldn't say we were in a trend market, but it was a lot more of a trend market than we've seen in the last 2 weeks. You have to make little adjustments. It doesn't mean change the entire way you trade. What it means is you have more confidence in certain setups, I'd say failing or succeeding, and that helps you make better decisions. By the way, it's not going to be perfect. We're all going to fumble for a few days while the market adjusts. That's part of this game. You get wigged out after 3 days. You're not cut out for it. Just got to make adjustments. Brandon, good morning. All right, we're still testing this 5-minute 20 EMA. By the way, we're getting hung up here a little bit. I would not hate to see this just continue to fade, get down through that 20, and just get away from the break-even point on the Nasdaq. Taz, good morning. How we doing? Oh, beautiful. Chris. I've now been trading futures for 1 month. Clearly, you took my advice of tracking your data. This is about the most beautiful thing I've seen all week. I've now been trading futures for 1 month, Chris says. My strategy, over 200 trades, good sample size, performs with a 49.6% strike rate at an RR of 1-to-1, so I am bleeding money in the long term. Barely. Plus commissions, yes, you are bleeding, but not nearly as bad as you could be 1 month in. That's fine, okay? Now, by the way, I do have a question. Actually, you hit it here on this next one. I executed well mechanically, but the edge is not there yet. Was it consistent, Chris? All your setups? Did you make consistent decisions based on the rules? I have another strategy, smaller sample size, which seems to perform better. Do I adjust my current one or try the other? If the other one, if you're running it at a 1-to-1, and maybe it has a 63% hit rate, then I would focus my energy into that one. However, it depends on the time frame. Right? Did you start testing that other one 4 days ago? Because the market's been different lately. So all of a sudden when the market adjusts and shifts more back to the mean, or even to a trend market, then all of a sudden that might flip. Okay, so right now, Chris, if I were you, I would put a little bit more energy into the second one that seems to show a better hit rate, depending on the sample size. If the sample size is 4 trades, then don't focus on it too much. Just try to get the sample size up. But if the sample size is 32, and it's showing promise, I'd focus more on the second one, but try to make adjustments to the first one, okay? Because it's damn close. 49.6, I mean, if you can increase that strike rate 5%, it's a pretty decent edge. It's not great, but it's pretty good. Rusty Bucket, good morning. All right, Bull's trying to adjust this thing and reverse it back. Uh-oh, Quicksilver. We're still kind of stuck to that 5-minute 20 EMA. We're stuck at it right now. Right now, we're not moving. ATR right now is sitting at 40. Have we seen a 40 average true range? No, I can't remember. Have we seen 40 all week? Maybe we briefly saw it yesterday, but that's a good thing to see. Heading into a long weekend, that's fun to see. Yeah, Chris, if that second setup you're testing, you have a sample size of 33, which is not great. That's kind of like the bare minimum if the trade is showing tremendous edge, which it's showing pretty good edge at 63% strike rate, 1-to-1. If you back tested it in 20, well, hang on now, Chris. I would forward test it. Forward test it with 1 micro. Back testing is great. It's smart. You should back test, especially if you're good with handling data and good at programming. You should do lots of back testing, but forward testing is king. Forward test this setup with 1 micro and try to collect as much data as you can without breaking rules. If you break rules, the entire data set is screwed. So Chris, my days, if I were you right now, would look like this. I would be focused heavily on forward testing the second setup with 1 micro. Okay? Make sure you don't miss any trades. At least try not to. We're always going to miss some. Try not to miss as few as you can. Or try to miss as few as you can. And then, while you're waiting, I would be making little tweaks, starting with the one that makes the most sense to you to try to improve the hit rate of the first setup by about 5%. If you can improve it by 5%, now you have 2 setups with edge. Assuming the second one holds up in the forward testing. All right, let's see if the bulls can bounce this thing off the 520 EMA and just get it out of there. All right, now remember, we have the U.S. new home sales. Huge report here at 9 o'clock. Huge. Just kidding, it's not huge. If you just close a position because of that, I apologize. This will cause about 15 seconds of volatility and then be done. So that's hitting in about 2.5 minutes. All right, you're gonna see these wicks here. And you start getting a lot of these. Think about what that tells us, right? It tells us bulls are trying, but the bears aren't. They're putting up a fight. They're not gonna let the bulls take this without a fight. And eventually, what can happen? Remember, ATR is at 40, which has us smiling. But if this keeps happening, eventually, the bulls can kind of let up. And that's not good for this. Which right now, this is our #1 concern. The price action can wait. We'll wait for the U.S. new home sales to hit the market to just see clear and make a decision. But right now, we need to protect this, which is volatility, because volatility has been so low lately, it's been kind of hurting everybody, I think. But right now, 40, that's a beautiful range, man. Hey, John, good morning. How you doing? Just let this clear. It's not going to do much. New home sales, I mean, the only reason it would move the Nasdaq, really, is if it moves the S&Ps. All right, came in at 0.743. Here, I'll just show you. See, that came in at 0.743 million compared to a forecast of 0.695 million. So that right there is the last headline. Volatility should pretty much already be clear out of that. That's the last headline here until the U.S. Treasury Secretary speaks at 10:30 Central. All right, so we have 90 minutes here of pretty much nothing scheduled. Maybe Trump makes a post. Who knows? Always keep your live stops going. But here we are getting more wicks. Hopefully we can get this cleaned up now that we have a free schedule here for the next 90 minutes. I think it's likely that we see a channel develop here. I really think we're in the mix for that. So the question becomes, do we turn this into a descending, which would mean a rejection right here? Or an ascending, which would mean a retake of highs and then a fade? With all these wicks and the relatively small bodies, we're not at all in a buy the close market at all. We're not in the sell the close market at all. We're in a range market. Which means unless things change here, to the best of our ability, we got to try to buy low, sell high, buy back lower. That mentality. All right, here we go, getting a little bit of a bull push here. Now, whether or not we get a wick on this bar is going to tell us a big story. The further back you go on these candles, for me, the less relevant they are, because the older that information is, and obviously this is constantly evolving, okay? So, all those little wicks in that dip right here, if we can kind of fix that by getting a nice clean close near the high, that starts telling us an interesting little story, which we will find out here in about a minute 15. 27 seconds out, getting a little bit of a wick back here. Bears are trying to step in. There we go. There we go. Half decent close there out of the bulls. Now, what we've seen each time this has happened thus far today. I mean, look at this, right? Good close out of the bulls. Shrinking bull bar. Bull body, I should say. Reversal. Nice clean close out of the bears, but it's the first bar. First red bar. And slowly loses steam. A lot of wicks, a lot of indecision, and then reversal. Range market. Not continuation market. Right, it's easy to get fooled by these big bars. It's like, okay, well, if we get... Well, let's see if we get one more little bull bar, and then you get a bull bar like this big, closing at 949 and a quarter, near the high. Well, there's a stop mentality there, right? That's great. But we're in a range market, which shoots the entire continuation sequence in the foot. So, I will take continuation if the range is wide. And if we're early enough in the range so that I can hit target before a reasonable expectation that the bears are going to step in at the outside of the range, which here we don't really have a concept because we only have one touch point. But this is everything that we got to think about. Context is the name of the game here. I see here, this entire 2-minute bar. I mean, come on, this happens so frequently. This entire 2-minute bar just turned into, sure, a doji, but barely a bear doji. Now, had we taken or had you taken a continuation trade there looking for that stop hunting mentality at the current high of day, that high wick on the chart you're looking at right now, remains to be seen, but it's not looking too hot so far. Again, those bears are trying to step in. Why? Because it's a range market. If you ignore market inertia, you're going to get sliced up. Now, if we do take the highs, it's probably good for a 10-point pop from some stops getting triggered. Then from there, then it remains to be seen. It's like, okay, well, what's the second touch point of the outside of this little channel that I think is developing? I think we're seeing a nice big channel form, probably about 100 points plus wide. And here the bears are. They're not going to let it go without a fight. Man, and we just got data today in April. Well, I think we got it today. Yeah. The more in-depth version of the new home sales. The April of 2025 median new home sale price is down 2% from this time last year. Which doesn't sound like a lot, but for housing, that's kind of a lot. All right, we've got 30 seconds left on this bar. If we got a nice clean close near the low of this bar, I'd be interested in a little fade down toward whatever ends up being the low end of this channel. But the bulls are wicking this right back up. See that we just took out some of those stops, right? It's good for at least a 10-point push. How much did we get? Oh, nice. We got about 20. Got about a 22-point push off those stops getting triggered. May have also just gotten a headline. We'll see if it comes through. Yeah, I gotta tell you, that looks like a headline bar to me. Remember, 21,000, if we see a test of it here, that is a tier 1 level. There are going to be people watching it. All right, now that's not enough to take trades off of it, but it's enough to think about it if you're entering something as a potential hang-up. You can see your typical of a range market. Those bears are going to step in pretty much immediately and try to take us back down to that previous wick high. See if they can succeed. Now the question becomes, does this turn into a trend or a little ascending channel, at least for the morning, the time being? I am more inclined to believe that this is turning into a little ascending channel. Because we're not in a trend market. Breakouts have been failing at about a 90% rate as of late, whereas in a typical market, it's like, or I guess the average is like 80%. You know, that's failures, not success, right? think a reasonable buy point. It's a pretty aggressive trend line. You guys know I'm not a fan of very aggressive trend lines. But we're in one of those markets where, personally for me, I'm not really interested in shorting tops because you're going counter trend with an aggressive trend going on in intraday. Now, that's not to say it's a trend market, okay? This is more, and so again, it's not a buy the close kind of mentality, at least for me, because we're seeing big wicks and pullbacks. We're not seeing clean high closes with minimal pullbacks. We've seen that a little bit lately, but the moves have been so small that we cannot classify it as a trend market. And I'm not interested, so I'm not interested in buying the top. I'm not interested in going short until we get more information. So really right now, what I'm really interested in, the one idea, which is kind of rare for me to have one trade idea. Usually I have at least two, depending where the market goes. Right now I'm interested in buying a clean pullback here. Let's see if the bears can do that. That fear and greed index is dropping. I think yesterday, what was it? 67, 68, now it's at 63. I think that should be at about 50, considering the New York session daily. Well, ATR is fading a little bit, but it's holding okay. It's at about 34, 33, 34. I'd like to see that hold. Ideally above 30. Right now, I'm more watching that 5-minute chart than the 2-minute. All right, see if we get a controlled move into, I'm really looking at like 25. Ignore the 2-minute chart here. This isn't really the right look. Let's get rid of this altogether. That's going to confuse everybody. All right, we'll take a stab there. with a kind of a scalp mentality. So I'm now sitting long, just on the outskirts of that little the channel. Again, this is right now. We're clearly in a lot more of what I would call a limit order market, rather than like a stop entry market. We have that 5-minute 20 EMA down just below 20,009. Watch how the price action develops here. Currently about 10, 12, 15 points in the money. All right, we'll pull that off there for about a 23-point winner. All right, so I'm now sitting flat. Again, just buy low, sell high mentality. We're in a range market. Breakouts are going to fail probably about 90% of the time. Now again, I'm sized down on these scalps. Okay, so that's about an $1,100 winner. Just small stuff. Kick off the day here. See what else we can grab. I'm going to stay in a kind of a scalping mentality. As far as our A setups, we'll see if we get any of those. If we do, I'll end up sizing up here. But right now, I'm more interested in small little base hit scalping. Joseph says, going to micros has been a game changer, gave me room to breathe. I couldn't fully implement my rules with the drawdown. Thanks for pointing that out the other day. Apex account has been steadily rising. Good work, Joseph. Good to hear it. All right, now, the interesting part of a setup like this, all right, you start to see something like this happening, and everyone starts thinking continuation, right? No, it's not quite that simple. I mean, you have a beautiful setup here. If we were in a continuation market, and it could turn into one here today, very much. However, if we got a nice clean close here and a rollover, you could buy that rollover and look to take out these stops at the high. It hasn't had a lot of time to gather stops, but there's some there. And you might be good for a 5-10 point push minimum off the stops alone, pushing you up toward 21. However, now we have 21,000 to think about. Tier 1 level. Okay, let's say you wait and this rolls over clean, let's assume it does, and pushes higher, and now you're sitting, and now say that next bar closes here. You're like, okay, I'm going to buy the rollover. Well, I mean, we're in a range market, right? 90% of breakouts are going to fail. Maybe it works. Or more than likely, the bears step in and they sell the close of a clean continuation, which happens a lot. Okay, so it's not just the setup. I think that's where a lot of people kind of miss it. They don't fully follow or they kind of like miss the boat. It's not just, you're not just finding a good setup. The setup is important, but what's more important is how you implement the setup with the market conditions. Now, on futures, that's especially important because they're very efficiently priced. David, I've been watching another YouTube live trading channel until I found your live channel. It's a relief to trade without hearing everyone watching is a stupid. Well, good to have you. Come on over. Only sometimes, not always will I call you that. All right, we're getting some headlines from the Fed speakers. About GDP. Nothing about tariffs. Fed speakers talking about tariffs is not going to be a huge volatility event. It was a few weeks ago, maybe 6 weeks ago, more than a few. But now that we're getting deeper and deeper into tariff talk, unless a Fed member says something really crucial about tariffs, most of the tariff headlines are going to come from the White House and Trump. Yeah, I mean, you guys see that? It's now, listen, one of these breakout attempts is going to succeed. But you look at that, you get 2 consecutive bull bars. Now, this as a beginner, even an intermediate, I think can be very confusing. You get 2 consecutive bull bars. I mean, what a beautiful close, right? You have the stop hunting mentality. You're like, wrench, that's your setup. Let's take it. Well, the problem is, we're in a very much so range market. A lot of times what you get in a range market that's this range bound is you can get a beautiful setup, but the bears see that setup and they sell it because they're betting against the breakout. This push through this would be the breakout attempt. And then you have that trend line we discussed that everyone sees right now because it's so obvious without drawing it, that meets about here. And then that would be the actual breakout attempt that's going to fail about 90% of the time. So this isn't just about the setup. You have to understand this is about how it implements with the market environment. And that doesn't complicate things too much, by the way. I know that sounds, it's like, oh my God, you're adding another thing on my plate as a newer trader. No. Don't think of it that way. Think of it like you're getting, I would say, the scoop of what trading futures really is. Which, by the way, the best probability with a 1-to-1 that you're ever going to get is about 60% on average. In some markets, that can creep up to maybe 70 or 80%. But on average, if you take all the market conditions and combine them, the best probability for a 1-to-1 reward to risk is going to be about 60%. So all you are doing every day is coming in, trying to make the best decisions you possibly can, mixed with the market inertia. What has the market been doing? What kind of market are we in? Is it range or is it a trend breakout market? And then just make the best decisions you can, accept the outcome, and go and enjoy your weekend. Because the longer you do that, the better you're going to perform. It doesn't matter what happens on one individual day. It doesn't matter at all. Unless you blow everything, in which case, if you're trading prop, what's everything? The amount of money you spent on the accounts? Who cares? Start over. Beautiful thing about trading prop. Especially as a newer trader, it's so nice. James, do you know the minimum capital needed to trade MNQ on a cash account? Well, futures, James. Futures are America. So it goes back and forth. With micros on a cash account, the margin is going to be either 50 bucks or 100 bucks. And it usually depends on market conditions and the broker. So I don't know, the minimum amount of money to trade micros in a cash account, if you wanted to push it, maybe a few $100 bucks. Not a lot. They let you do what you want. You can trade that all day long. 23.5. Daddy, my man. All right, well, one little scalp here so far on the day. Let's see what else we can grab. Kind of size down a little bit. Just trying to hit little range scalps when we can. Now again, 21,000 here when we get up to there. That's going to be that's a tier 1 level, okay? Now, I know that there's going to be some questions. Hey, you know, like if we test 21 and we pop through, are we going to get liquidity popping through off of stops or something from longs? I'm sorry, from shorts that have their stops above 21,000? Yeah, maybe. But I wouldn't imagine it's going to be any more than like a shorter-lived high of day. Again, it's a tier 1 level. It's not an S tier level. A few weeks ago, we were around 20,000. And there was a beautiful trade. ATR, by the way, right now is about 33. We took a beautiful trade using 20,000 as a liquidity zone. I think we shorted, if I remember right. We shorted around like 20,030. Maybe it was long. I can't remember. I try to put all these trades out of my head. But we used 20,000. It was the first test of the day. A bunch of stops triggered, pushed us right to target. That happens on S tier levels, 15,000, 20,000. It will happen at 25,000. But tier 1, like 21,000, 19,000, 22,000, it's less extreme. It's there, but it's less extreme. So I'm not thinking about it too much as far as stopping me from taking a little range setup. But it's in the back of my head. James says, I don't understand how NQ and ES move practically identity. Seems like the market is 99% controlled by algos and institutions. Yeah, so commonly it's been spewed that it's about 70%. I think we're probably higher than that. Now, especially. But I also think it's important to remember that the markets are really deep. The futures markets are really deep. There are a lot of participants. You ever go to like a big event? I'm not really into this, but you ever go to like a big event and look around and you see 80,000 people and you're like, holy shit, there's a lot of people out here, like in the world in general, because this is just one event on one day in one city And a very small percentage of the whole city is here. There's a lot of people. There's a lot of market participants, and a lot of them are algorithms, but there's also a lot of humans. Razor Tank is selling covered calls. Yeah, man, net short option strategies. Like running the wheel. Net short spreads. Well, I should say net sell spreads. Not necessarily net short the market, but net sell in the option spread. That's the first thing that allowed me to be like a quote-unquote full-time trader, meaning all the bills were being paid from trading. That was the first thing. It's option strategies. If you're not buying short-dated options, hold a special place in my heart. But, you know, at some point it's like these, you know, even a built-out options portfolio with all these different strategies on, because when you start doing it to a degree, you really should trade small per option strategy and have a lot of positions on at once. That's the way that I found works best. Even a built-out options portfolio is going to take 10 to 15 minutes a day to manage, so it's like, all right, what else are we doing here? Yeah, Taz, go digging in the archives. I've made videos about it before. Peter says, hi, Nico. Do you think the market struggled to make new all-time highs because of greed and people looking to short the top or cover their profits early? It just takes something to boil it over usually. Now, when you're in a trend market, pushing into all-time highs, it's usually like a big thing, like a big headline that lasts weeks. That just keeps pushing. The trend feeds on itself and keeps pushing at all-time highs. And the more you're making all-time highs, the less resistance there is to continue to make all-time highs. I mean, like psychological resistance, not like a TA resistance. But when it's been a while since you've made a high, there's just psychological resistance. People don't necessarily want to pay the highest it's ever been. So usually it takes something, whether it's in a company's earnings or a headline from the president at the time, to boil it over and be like, all right, now we're willing to pay. And then that resistance is broken, and then more and more people follow. I know you can see we're forming a little bit of a flat top, which makes this region smaller and smaller and smaller. We're looking at about 35 points now of room, which is still okay. I hate to use the word collapsing, man, but ATR is kind of collapsing. Remember when it was over 40? It's now dipping, trying to dip below 30. Hasn't been that long either. Hopefully we can hold up above 30. It's going to take a decision around this flat top, which is ultimately kind of around 21,000. Again, a tier 1 level to, I think, hold that ATR up. At the bottom of this range again here. Looking a little bit deeper. I'd prefer to show a little bit of a deeper pull in on that 5 minute in particular. The 5 minute kind of has my main focus right now. Top left of your screen. Yeah, just a little scalp mentality here. Yeah, bull's trying to wick it back up right away here. I'm always cool with if I, you know, quote unquote miss a trade for being too picky. I'm not going to have any beef with myself over that because that's a good decision. If you miss something because you're being too picky, you should have all the forgiveness in the world for yourself about that. That is a good thing. I guess to an extent. Right now, I'd really prefer to see this 2 minute bar here. Push. Ideally, at least make an attempt at a break of this flat top, because what you see here is you could look at this and say, well, we're still in an ascending channel, but the ascending channel is flattening out. And when the ascending channel flattens out, guess what happens to probability? It increases that you see a successful downside push. And if we're channel scalping, that's not great for us. Which is why I was picky on that last trade. Trader Matt says, curious to get your take on tick charts. Some say you can get a better feel of momentum. Thank you for this community. It's just a personal decision. Listen, guys, I've gotten a lot of questions on specific types of bars, different candles. People keep asking me about the same kinds, so someone out there is probably talking about them. It's a personal decision. I know traders that read candles, like you're seeing here, and do very well. I know traders who use kinds of candles that you've never even seen or heard of, who say they can't even read this kind of chart because they've been looking at the same candles for 30 years and they do very well. It's just a personal decision. Whatever gives you the best, I would say, feel of market inertia and helps you identify your setups and is easiest on your eyes, pick it. Now, tick charts is more like a time frame difference, I would say, than an actual candlestick difference, depending how you set it up. Fine. I just prefer time-based charts because it's something, I would say, slightly more like real, because every rollover of a 5-minute is also going to be a rollover on a 1-minute. Every rollover on a 2-minute is also a rollover on a 1-minute. The top of the minute is something that's the same for everybody. I don't know. I just prefer, I've always looked at time charts. I just prefer time charts. I think tick charts are gaining popularity because I think a lot of people out there are using them. If you like them better, use them. There's no right or wrong way to look at the data. It's just what helps you interpret the data with the least amount of friction. There we go. Now we're getting a push here. Let's get a little clear up top, and then I can look to take that little downside test again. Get a little more confidence out of the bulls. SK says, brother, you don't know me, but thank you. Watching you this week has changed my trading. It's good to hear. Hope to see you continue to be a regular in the chat. Appreciate you popping by. All right, Lee, you watch yourself now. You watched it. I don't know if we should get into this on a Friday, man. Bulls, you keep stealing my setup. Keep running it away from me. That's okay. I would really prefer to see this pop up toward 21 a little better and then retest anyway. If you are new here, the context. I will say hate. I hate the PDT rule. I hate the PDT rule. Do not get me started, please. It's an easy way to kill about 25 minutes. One of the least American things in existence in this country today. No, futures do not have PDT. The futures market is America. We're flattening out, man. You see, this was a different setup 30 minutes ago, 20 minutes ago, right? I mean, it really was. We were getting more, well, I'd say we're getting cleaner bars. And look at this, wick, 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 sideways, sideways, sideways. The setup's changed. Which means I gotta hold off because I think the bears have a decent probability of fading this. Aaron says, I'd rip my hair out over this price action, but 2022 took care of that already. Man, yeah, the 2022 bear market. That was something. That was brutal, man. People that were heavy in certain sectors of tech. Just when you think it can't go any lower. Brutal. Some stocks 90% down. Blue chips. This here, this is really flattening out. So I think next stop here is probably the 20 EMA on the 5-minute, at least for a test. And we'll see. I gotta tell you, if today ended up, this morning I mean, if this ended up looking like this, open, chugging higher, curl, break the 520 EMA, go down and break downside through pre-market lows, I gotta tell you, I wouldn't hate it. That'd be about our best case scenario here today for trading. Now, does that happen into a long Memorial Day weekend? I don't know. I think the psychology there can go both ways, so maybe it's a wash as far as the psychology of that. You know, a lot of people, if you go on forums, they'll say, people are feeling patriotic. They're going to leave things alone. And then other people will say, well, it's a long weekend. People don't like to be out on their boat for the first time of the year and have risk on. They just want to enjoy the weekend, go risk off. So there's both sides to that coin. So the psychology, I'd say, is about a wash. And it's back to the king, as usual, which is price action. And here we are, coming in for a little bit of a test, getting close to that 20-minute... I'm sorry, the 5-minute 20 EMA, top left of your screen. All right, now we are back here. Again, 5-minute 20 EMA. We're back to testing. We held it last time. However, the bears, I think, have a little bit more strength here this time. We'll see if the bulls can pop this back higher. Because this time the bears have that flat top up ahead of 21,000. Which, of course, is going to be a tier 1 level. We'll see if the bears can just fade this lower, get through that 20 on the 5. Again, I wouldn't hate it. I would not hate to see a fade. I don't know. Again, there's two sides to that coin. But as far as price action for trading is concerned, regardless of the long weekend, things like that, just a hard break downside would be good. Jet, good morning. But there's the rollover of that 2-minute bar. It did close inside of the previous bar's wick, which is not the strongest close that the bears could have had. And we're still holding the 5-minute 20. Clearly it's being watched heavily. The range, by the way, so far here on the day. 171, not bad. Not bad, not extraordinary by any means. This is just for the New York session, by the way. How many points is the range since the open? In total, we have 171 and 3/4 point range. Not horrible. Could be better, though. You can see the bulls are trying to hold on to that 5-minute 20. All right, there we go, Bears. Let's take this thing down through that 20 EMA on the 5 and get us that little dip that we were looking for. And when I say dip, I mean a full-blown curl into a downside push. That would be nice. Now, a downside channel I would also take, in which case we could hit a little descending resistance as many times as we possibly could. But this has a couple minutes of work to do. I'll tell you what, I'll be back in 2 minutes. Don't go anywhere. All right, we're back. We're back. 2 minutes, just like I said. All right, we've got a little descending channel forming here, which is good. Let's see if we can get a nice little push down through those lows, then a retest, and I'd take that. That'd be a good stab for me to put on. You see a little flat bottom there forming. I just want to see the bears take that out. I don't really care to what degree. I just want to see it get taken out. And then a little bit of a retest. But I gotta tell you. And we're looking at about 30, 35 points. We have 50 seconds left here on this 2-minute bar. ATR, average true range, currently sitting at 29, which is still pretty good. I mean, we're holding above 25. I'd prefer to see that above 30. We got a wick just below there. Oh no, that might be a data error, but there we go. We got the push anyway. Okay, we took out that little flat bottom. Good, that's good, good. So now if we see a retest of that little descending top end of that channel, that'd be a good little scalp stab for me to put on. Okay, we've got that 5-minute 20 EMA kind of right there, but again, we talked about this yesterday. The more that you see that tested, the less relevant it becomes. It can be very psychologically relevant if it's being tested, you know, once every hour, for example. But when it's getting straddled like this, people tend to lose interest. All right, we've got 25 seconds left on this 2-minute bar. Pull over. I'm looking for a push up toward like 32, 33-ish. Out of that region. Yeah, just a scalp mentality here. Let's see if we can get that push. Come on, Bulls. There we go. And I'll take a stab there. So I'm now sitting short on the top end of that little channel. A little bit of an overextension. Again, right lately we've seen about 90% of breakout attempts failing. Now it's not really a clean line, whether it succeeds or fails, okay? But that all that is a bet on the breakout there failing. So my average price sitting short is about 35 and a quarter. Well, it is 35 and a quarter. So scalp mentality. Let's just see if the bears can fade that back. And if this range holds up, and if we see a breakout, we'll cut it and move on. Only about 7 points in the money. A nice wick back there on that bull bar out of the bears. All right, bears, fade this a bit lower here. That bull's taking it back higher. Oh, that is not very good. It is. Just managing this one as we go here. I'll get ready in case I gotta cut it. Mitch says, I don't have a lot of screen time as a new futures trader. Are big wick days like this normal compared to last year or a few months ago? The market, the last, I'll say, week and a half has been, I would say, the minority. Tariff time, maybe, what was that now, 7 weeks ago-ish? Minority. Okay, everything in between has kind of been the average, I would say. With the twist of, you know, you have to keep an eye out for random tariff headlines, which, again, is not typical. You can sometimes get away trading naked, meaning without a live stop. In an average futures market, that's relatively normal that people will do that. Right now, I think that's just an awful idea, because we've seen wicks that were 400 points, which obviously we don't want to mess with without a stop, without a live stop order. So I do think it's always important to have a protective stop. So you're on that 2-minute chart, top right of your screen. We're seeing the bears try to step in here, turning that into a little doji. And very representative of a range market. Bulls try to break it out, bears step in. Bears try to break it lower, bulls step in. See if the bears can fade this back. Yeah, bulls are trying up here, but they're struggling. Bears aren't, they're putting up a fight here. Nah, Joseph, yeah, I'd be cutting this one well before this flat top here. This up as we go. Yeah, we got kind of a battle going on here. All right, bears, I'd say it's about time you step in and curl this baby, but I'm ready to manage if I need. There's the bears trying to step in. Taking out the low of that previous bar for the first time in this sequence. Let's see if they can actually get a real curl going here, though. Yeah, another attempt out of the bulls. It's just... is weak. If that changes, I'll manage this. That ATR is now below 25, by the way. It's at 24. Just below 25. Yeah, we're gonna push here. Finger on the trigger. I'm ready. I'm ready to cut. ATR dipping down to 23. There we go. It's about time. I'll cut it there as we come into a test of that flat top. So we're sitting flat now. Yes, Stefan, it's your favorite song, man. It looks like that flat top is going to be in play again. So let's see if we can get a push through that little flat top up toward 21. That's going to be a tier 1 level. And then we'll see what we can do around that. I just want to get this little flat top out of the way, man. We are getting a few headlines here out of the U.S. Treasury Secretary. Coming through now. Then we have another Fed speaker here at 11 Central. Then again, Trump is signing some executive orders at noon, so that's really about it as far as news. That is what I'm watching right there, right ahead of 21,000. If we can get a break of that flat top, that might be enough to push us right through 21,000 by at least a couple of points. Now, the low of yesterday's session is 113 points further at 21,113. So, you know what? Right now, I don't really care which way we go, but that's not really true because I would prefer that it would just be easier for volatility if we just dumped. If we rejected this again and just went lower. All right, here you go. Here's the test of the flat. Let's see what we get. God, you... I wanted to see a little retest of the low of this bar. And I was going to get long for this. I missed it. That's fine. What do we get? Look, exactly what we talked about. We got about a 5-10 point pop through 21,000 on the break of the flat top. Son of a gun. Didn't give it to us. We just missed it. It probably gave it to us at some point there. But by the time I made the decision, pop right through. That's okay. Sometimes you miss it. Now let's see where it goes from here. Joseph, what about the retest entry? Yeah, I can't because now the pop has happened. It's a one-time event. It's gone. The stop liquidity there is gone. I can't take a retest. That's not for me. Somebody might. If that's one of your setups, don't let me talk you out of it. If you have edge, you have edge. Yeah, that just would have been a nice, quick little scalp. Would have worked beautifully too. That's all right. Put it in the rear view. Move on. New trades every minute. Someone out there, at least. Look at this bear bar. Retaking the low of that big bull bar we just saw. Let's see if the bears can hold it here. ATR, by the way, in case you're wondering, is currently sitting at 24. Actually, about 23.6. Nice work, exposed. Now you can see this flat top. When you get the initial pop, the liquidity's gone, but the interest isn't. You oftentimes get 1, 2, 3, 4, 5 retests until the market makes a decision. And typically when this happens, we just want this thing to make a decision as quickly as possible, because on these retests, there's really not a lot here until we pick a direction and just pull away a little bit. We don't need it to pull away a lot, but we just need that flat top to be of less interest, which ideally will happen here pretty soon. All right, we have 37 seconds left on this 2-minute bar. Still about 3.5 minutes on the 5-minute bar. Good to have you here, Michael. All right, there you go. There's another retest of that flat top there. Again, once that initial liquidity's gone, there's no rocket fuel left, right? I mean, man, you get that first pop through the flat top. What kicks it off? The stops, right? All the stop losses that were up there, all the shorts getting stopped out. That's basically a whole bunch of market buy orders hitting at once. That's enough to push you to 21,000. Guess what's up at 21,000? A few more stops. That's enough to push you to 2105, 2110. And then it loses steam, fades back down, retests the flat top. U.S. Treasury Secretary says we want to make the U.S. the most attractive for capital. Well, maybe we should see, you know, historically, traders have always kind of gotten screwed in the tax code. Like, you know what's kind of ridiculous? You taxed on capital gains. But they don't let you write off capital losses the same way. So people come in, they lose a bunch of money, and then they, like, limit it. They, like, limit how much you can write it off per year, I think it is. But capital gains, you get taxed unlimited. You want to make the U.S. more attractive for capital? Come on, man. Let's get the big money industries some, I would like to see some tax breaks. Yeah, Benny says, to be fair, nothing we were doing here is of any value to anyone. Yeah, I tend to agree with that. Which is why I do all the other stuff. The value being provided here is if someone just trades, is market liquidity. That's about it. Which is kind of a weird life. And the side of trading that I don't really think gets talked about, which is once you've kind of succeeded at trading and you're doing well, is the self-purpose side of things. Which I get it. Like, okay, I'll tackle that when I'm making $1 million a year. Like, I get it. But that'll come. And you'll have to find something to fill that. Cross that bridge when you get to it. Don't worry about that now. Trading's hard enough to figure out as it is without that hanging over your head. Yeah, there you go, Benny. Made over $1 million a year trading. Sentenced to 20 hours community service. I'd be cool with that. All right, now somebody push us in a direction that is relatively decisive, because this flat top's getting old real quick. You know, I ran a poll. I posted it last night, and the results, it's on the community page on the channel. The results, I gotta say, they kind of surprised me. I said, what's your goal? And there was 4 options. 10,000 a month, 50K a month, $250,000 a month, or $1 million a month or more. And 10,000 a month got 58% of the votes. Now, I get it. Like, that would obviously take a lot of pressure off of most people, I think, to add 10,000 a month to your income, or even just make 10,000 a month if you quit your job. But it's interesting. It seems that a lot of people are interested in, now, maybe people misunderstood, you know. Maybe people thought, well, like, well, if I made 10,000 a month, I could quit my job and I'll worry about scaling after. What I kind of meant, like, big goal, like long-term goal. Like, where would you get to where you're like, okay, I'm cool if I didn't grow from here. don't know, it's just interesting. I think in a way it's cool. I mean, obviously around here, it's the entire mentality is like, if we're gonna do it, we might as well go huge. But there's another side to that coin, I suppose. You know, if people are getting into the market saying, you know what, if I could make 5,000 or 10,000 a month, that would really change things for me. I think that that's equally as cool in a lot of ways, because, you know, you have people coming in seeing this as a potential way to escape. And when you have tools like prop firms, I gotta tell you, like, it's not, I gotta tell you guys, if you take it easy, you develop an edge, it's not out of reach at all. It's not out of reach at all. Even if you're relatively new, just take it easy, trade one micro, find your edge, and then scale it. But it's cool. I think we got a good mix in here. We have people in here trying to go to $1 million a month plus, and we have people in here trying to get to, you know, a few $1,000s a month. It's good. It's a good mix. Clinton, 60 million a month. I love it. Pat says 100,000 a month is my written goal. I think that's a good goal. It's a great goal to set. Here we go. Bears pushing us lower. It's about time. Let's see if we can make a move. Maybe we end up forming a little descending channel. Anything to get us away from this flat top is of interest to me right now. Tubed out. I once did $1 million in a month and gave it all back. Man, I think we'd like to hear that story. Yeah, I mean, the way that prices are going, man, even at risk of sounding out of touch, but being realistic, like, let's just be straight up real here, okay? The way that prices are going and the way that taxes are structured right now in this country, man, even in the cheaper markets, 10,000 a month, like, I don't think you're comfortable. Just shoot higher. Seriously, guys. Just whatever's your number, and I mean this, 10x your number. What's the harm? What's the harm? You don't believe yourself? We'll fix that. If you set your goal at 10K a month, guess what? You're never getting to 100. If you set your goal at 100,000 a month, you'll probably get to 10 just by default. What's the harm? Just do it. It's free to just think bigger. All right, here's the retest of the 5-minute 20 EMA. Luke, was great as a sim trader? Yeah, this is a common story. Told myself I would be happy with an extra 2,000 to 5,000 a month forced trades when I first entered the prop space, trying to make that per week. Big mistake. Yeah, there's a big difference between trading in a sim environment and then when you have, you know, even though that, you know, the prop space, unless you're in a live account, is going to be a sim environment, it's still different because you have money behind it. All right, we're currently just stuck around that 5-minute 20 EMA, top left of your screen. But let's see if the bears can take this through that. And then once we're through there, it's kind of free and clear. I'd love to see if we can get a sweep of these little lows here. Yeah, and listen, I see a lot of you guys in the chat talking about how you seem to perform better when you don't care, and the reason you don't care is because you're in a sim right now. This is one of those things that is so important that I struggle to find the best way to explain this, because the only way to get here is to go through. You can't go around caring. You just have to go through to get to the point where you don't care. But being able to come in each day, make the best decisions you can, and genuinely just accept the outcome and really not care is obviously like a superpower as a trader, because you don't have that luxury. That's the problem. It's all kind of backwards, right? In the early days of trading, like everything in life, it's backwards. Being able to not care is a superpower as a trader, like genuinely not care. You care enough to take good setups. You don't break your rules. You make good decisions only. But once you put the trade on, it's like, I've already accepted. If it's a loser, it's a loser. If I win, great. I don't care. Because I know that at the end of the month, it'll be green. Because you have edge and you take a big enough sample size for that to play out consistently. In the early days, you don't have that luxury, which is really tough. It is really tough. Which is why so few people actually make it, because you don't have that luxury. So you have to kind of fake it. You have to fake that confidence and fake that you don't care. And the only way to help you do that I can tell you is keep trading, don't quit, keep testing your data, and trade small. Trade 1 micro. Trade so small that even if you need the money, you don't care, because you're so small that it wouldn't even help you anyway. If you're trading and if you're at a size where you need money and you're trading like 5 minis where the upside could really help you and really, really improve your life or get you out of a situation, but the downside is really stressful because it could wreck you or delay things if you're trading prop or whatever, that's a horrible mindset. I mean, I get it. It's like, well, I need money. If you need money now, trading's not the spot. You're not going to have money today trading. Trade 1 micro, get real data, do it the right way, and it will be way faster in the long run. Believe me, guys, I've been making videos since early 2021. I cannot even tell you how many people I've seen in that almost 4.5 years who, if they just did what I said back then, might be in a completely different situation than they are now. But obviously, I think a lot of people who are traders have similar personality types where you have to figure it out for yourself. You have to do it yourself. You're not going to listen to anybody else. And I don't blame you. I don't blame you. I did the same thing. But could you imagine if a lot of these people who just buy short-dated calls every week had started trading seriously and taking data and really trying to develop an edge in January of 2021, where they would be right now? You need a kick in the ass. I think that's about it. All right, well, we're in a little bit of a sustained down move. We're still kind of struggling around that 5-minute 20 EMA over here, right? The bears are trying to hold it. Trying to hold it. We've been through it by about 10 points. ATR is now at 22. It's fading. Quickest way to get that back up is to, for the market to kind of collapse below that EMA. Clinton, the delay in time is the most hurtful. By trading stupidly, that's what you end up losing. Yeah, I agree. Yeah, Joseph, so here's the problem with trying to win every trade to all you guys. By the way, I'm still watching for setups. We're not just chit-chatting. If you get in the mindset of I want to win every single trade, that's just, in the futures market, things are priced too efficiently. That's not possible. It's genuinely not a possibility. Even if you went 1 to 99 reward to risk, where your win rate's going to be damn high. It's going to be very high. But you're not going to win every trade at all. You're going to have that one-off loser, and it's going to come every once in a while. So if you're genuinely stuck on like, well, I want to win every trade this week or this month or even just today, that's out of your control. And if you hold yourself to that standard, you're setting yourself up to feel just awful about yourself, which is not good for your confidence. Because you can make the best decision you possibly can for your edge at that moment. And if you're running a 1-to-1 reward to risk, the best probability you could have on an average market condition is 60%. In some markets, you might get up to 70. In other markets, it might be closer to 50-50. But if you're holding yourself to the psychological standard that like, well, I want to win every trade, you've just immediately set yourself up to feel really shitty about yourself when you lose. So don't have that expectation. Say, I'm going to come in, make the best decisions I can, execute my edge, not break my rules, and accept the outcome because I did my job. If I was red, so what? The weighted coin flip didn't fall in my favor today. Fine, but it will eventually because it's weighted, right? That's what an edge is. Tony says, Nico, some people with stubborn personalities have to see the big losses initially so that they don't not get tempted later on. Some of the risk takers, in my opinion. Yeah, I wouldn't disagree. And listen, that's okay. That's okay. Some of those people go on to do great things. And I do think that was necessary for me. Sometimes you got to get sliced deep to really take something to heart. Otherwise, it's just words. Like some of you listening right now, you're hearing me say all this, you're like, yeah, that's great. And then you're going to go figure it out yourself anyway because you have to, and that's okay. We're probably similar in that way. Why would you listen to me, right? You got to figure it out for yourself. It's the more painful way. It's the slower way. But if it gets you there eventually, so be it. Bulls slowly put in a nice little candle, and the bears instantly take it lower and take out the lows of that little, tiny little couple candle flat bottom. Good. It's good to see volatility. That's the biggest bar we've seen in a while. Yeah, I mean, this is the problem. You tell yourself you have to follow your rules, and you don't even listen to you. So why would you listen to somebody else? That's part of the game. I think a lot of people think that, well, everyone's so different, so we gotta, you know, I don't know. I think if you end up wanting to be a trader, there's probably a side of you that's a little crazy. There's probably something wrong with you. All of us. And that's okay. We're all wired relatively similarly. Yeah, Brandon, I've been thinking about this setup a little bit more lately because of the market conditions. Can you explain your rubber band Reaper? Ooh, haven't used this one in a little while. Seems like that might work well in this type of market condition. Yeah, I've been considering the same thing here. So the rubber band Reaper is a setup I developed, and it's very fine. I mean, it's very simple. Fine. It's very simple. See the bottom of your screen? That blue is the ATR. It's the average range of a 2-minute bar based on the last 10 2-minute bars. See the yellow bar? That is the range of the current bar. Now, I actually need to change my settings on NinjaTrader because it's calculating the range of the previous bar once that bar closes. But when I'm trading rubber band Reaper is that I need that in real time. So what it is I look for, depending on the market conditions, 1.5 to 2x. Let me start over. Depending on the market conditions, I'm looking for the range of the current bar to be between 1.5x and 2x the ATR in real time. And then I take the other side for a scalp. And, you know, interestingly, if we look at the entire day today, would have worked well here. This bar probably wouldn't have taken an entry if you were running a little tighter, 1.5. You see this bar here, depending on your stop. Yeah, we really only dipped maybe 13 points past the entry point. Would have worked relatively well here. So it works well in range markets that are wiki. It doesn't work well in continuation markets. If you need context behind the setup. If you get stuck trying to trade the rubber band Reaper in a trend market, you're going to have a very bad time. But in this kind of market, thinking about breaking it out a bit more. All right, Nico, do you think that yoga or other forms of relaxation or affirmations before trading help with the psychological aspect? It can, depending who you are. Listen, if you feel that it helps you, fine. I think that a lot of people, the current social media culture is like having like the 3-hour morning routine, which ultimately is great for viewer retention and engagement. This is all just rage bait. You guys know that, right? I mean, in order to, if you upload a 4-hour morning routine, like, come on, like. But it's great for engagement, man. Gets those views up. But if you spend 5 minutes in the morning doing one of those things, fine. I just prefer in the morning, I don't engage too much in that kind of stuff. Very simple morning routine. And then for psychology, personality type wise, I just train as hard as I can. But if you're more the affirmation yoga type, have at it. If it helps you, do it. Eduardo, yeah, this is common, Eduardo. Trading is starting to mentally make me feel sick at times. I think I just been on a 2-week losing streak after going 2 months of winning. Yeah, listen, the interesting thing about financial loss and trading in general is that, and this has been studied tremendously, you have a physical response to loss. It's very real. Which makes trading that much tougher if you are in like a little bit of a drawdown or a little bit of a losing streak or a struggling time. The more you go through it, the easier it is and the less you care. And again, here's another example of the only way around is through, I think is the saying. Or I should say the only way there is through. You just have to go through it as many times as possible, as quickly as you possibly can. Which means test your data, find an edge, try to take the setups as much as they're there. Don't force anything where you start, you know, screwing with your rules or messing your data up. But go through it as many times as you can, and eventually you'll get to the point where it's like, well, I've been here, you know, 17 times. What's the difference here? So I'm just waiting for this channel to continue to widen out here and develop, and I would be looking... Well, right now I'm kind of looking at this little descending resistance. But with these wicks, I'd prefer to see this take out a new low and then make a retest. I'm not necessarily into buying deep, aggressive descending support levels. I'd much rather sell the descending resistance. Probability is just a bit higher. All right, guys. Well, remember, hey, if you're looking for daily payouts, Take Profit Trader, 30% off, no activation fee, which once you pass, you pay nothing. If you don't use code BIG, you're paying over $100 once you pass. Surprise, you passed. Now you have to pay over $100 to activate the account. That goes away if you use code BIG, B-I-G. Best deal always at Take Profit Trader, as well as Apex. But Apex right now, it's still single day pass, which is really nice. You can pass the eval in 1 day, but it's 50% off. I'm sure they'll raise that to something better here in the near term, and I will let you know as soon as they do. But that code, if you want to test it any day, will always be the best deal, no matter what it is at the time. All right, guys, hey, no stream on Monday, holiday weekend. I will see you all back here for regularly scheduled work. Tuesday morning, 8:15 a.m. Central Time. Subscribe to the channel, like the stream on the way out, and it should pop up for you Tuesday morning when you open the app. All right, guys. Have a good holiday weekend. I'll see you in a few days. Have a good one.